Inflation is actually a good thing. So whenever people hear inflation, they should not be scared. Two types of inflation, or drivers of inflation. There is what they call the demand pull inflation and cost push inflation.
Welcome all our viewers. It's another opportunity to discuss inflation and its effect on the investors. My name is Moses Ngina, a private wealth advisor at Nabo Capital. Today we are privileged to be joined by our portfolio manager, Charles Miano. Karibu.
Asante sana.
Yes.
Yeah, thank you very much. I look forward to this discussion. Hopefully we enlighten our viewers on inflation and its effects and how to invest during this type of environment.
Great.
Yeah.
We have had people complaining the rising cost of living and others talking about inflation, and maybe they're not sure what is this inflation. Maybe you can explain to us what is the inflation.
Yes. So inflation basically is, according to the economic definition, is the persistent rise in the prices of goods and services over a period of time. So inflation is actually a good thing. So whenever people hear inflation, they should not be scared. It's dependent on the level of or rise in the inflation. So another way to look at it is inflation occurs when you have money that is chasing or people wanting to buy goods and services and less of these goods and services being available. So in this case, let me give a sort of tangible example. In May 2022, the inflation that was recorded was 7.1%. So what that means is if you compare the prices of certain basket of goods that are determined by, that are computed by statistics, in this case the KNBS, the Kenya National Bureau of Statistics. There's a basket of goods that includes the common goods that including food, fuel, transport, communication, things that are consumed from you can say goods as well as services by the common man. So they increased by 7.1% in May 2022 compared to May 2021. So that in all is what you can interpret when you hear inflation of 5%. It means the price of, let's say if it was 5% this time around, it would say our goods and services have increased by 5% compared to last year, the same month. So that's how to look at it. So generally, that's what inflation is. And as I mentioned earlier, inflation is a good thing.
Yeah.
The main thing to look at it is when it becomes excessive. So when it becomes excessive is what we've heard of, like hyperinflation. Similar consequences happened in such as countries like Zimbabwe, where inflation was at a significant, increased so significantly that it made the value of the money, useless. So we'll touch maybe something on that afterwards, but generally inflation, as long as prices are going up, that means there's growth. That means businesses are able to price accordingly. People are also able to pay for these goods and services, and it's a good thing. When it becomes excessive, when inflation goes too high over a short period of time, then that's when it becomes scary. But inflation again is a good thing.
Wow. Yeah. Thank you, Charles.
Yeah.
So what you're saying is that the inflation comes to deplete the purchasing power of the money that we hold as consumers.
Yes.
Great. Now, what are the sources of this inflation? We have heard people saying maybe the oil that we are importing is what is the price of the oil, or the production cost has gone high.
Yeah.
What are the types of inflation and the sources of this inflation?
Yeah, so there's two types of inflation, or drivers of inflation. There is what they call the demand pull inflation and cost push inflation. So demand pull is basically demand, you can look at it as demand pulling inflation. So what that means is you have, in a situation where the economy is doing well, you have people, more people employed, then that means people are earning more money, right? So in a scenario, imagine a village where this village just produces bread, for example. In this case, now the villagers have been hired, they're working in the farms, they're working in the factories, now they have more money to spend. So they're buying this bread, right? So when they're buying this bread, what happens to the producer of this bread? let's say there are like 100 bread available, so all the breads are bought. So the owner of the business is, in order for me to produce more bread, I'll have to increase the price of the bread, so it can accommodate the amount of money that is being used to to purchase all this bread. So the owner increases the price of the bread, for example. So it allows him, when he increases the price of the bread, it allows him to invest even more, right?
Yeah.
And so he can produce more bread, and then now in this case, when he's producing more bread, it matches the amount of money that is in circulation. So in this, so that's what demand pool is. It's people having more money because there's more employment, and when there is more employment, they're able to afford more goods and services. When they're able to afford these more goods and services, this forces the person on the other side who's producing the goods. In this case, we've used an example of bread, or it can be services, be it any type, transport, communication, hotels, whatever it can be. Given that they also need to take into account that there's more money, then they increase the prices on the end, then that leads to inflation. And then you have what we call cost push inflation. That's what's mostly occurring right now. This is when the input or the goods used to produce the goods are high. In this case, why inputs are high is because we are facing a scenario where the price of commodities have gone increasingly up. We've seen the prices of oil, especially driven by the Ukraine-Russia conflict. So they are at record high. The price of oil is record high. We're also seeing a scenario where there is what they call supply chain constraints, where it's very difficult for example, there's news around where it's very difficult for certain producers, for example, producers of cooking oil right now are finding it very difficult to purchase or to get supplies of raw materials to produce the common cooking oil. We had something about Pwani oil, for example, where they were saying they're having difficulties able just to import. So in this case, in that scenario, that leads to the price of oil going up. We've also seen a scenario where maize, people who produce maize, the price of bag of maize has increased because there's less of maize available, and therefore if there's less of that input if there's less maize to produce the maize flour, then that means you have to increase it to take account of the low supply. So in this case, we are having very low supply, and we are having the prices of commodities going up, meaning now the producers are the ones who are affected quite a bit because they have very low supply, and therefore they're forced to raise their prices in order just to meet the demand that is there. And whenever there's certain things like shortages, as we saw oil before, where there's fuel shortage, we're seeing the shortage of oil, we're seeing shortages of different products, then that's what is basically called cost push inflation. So currently we are facing more of cost push, where it's affected by other commodities going up, as opposed to people having too much money, which is demand pool, and trying to buy stuff. So it's more of commodities as opposed to people having too much money in this case.
Wow, thank you, Charles. And is it something local or globally happening?
It's global. For example, the US right now are facing the highest rate of inflation they've faced in about 40 years. Currently, it's at 8.6%. Their target, this central bank, in this case, the Federal Reserve in the US, have a target of 2%. That's what they deem as being healthy. So anything above 2% is very high, right? So what there are certain things that the central bank in this case does to make sure they try as much as possible to fight inflation or to bring inflation to manageable levels. Because when you have too high of an inflation, then what causes that is prices of goods and services go up significantly. And when the prices of goods go up, it becomes very hard for the common man to afford these goods and services. So if it continues too long, then you have a scenario where it can lead to, you know, sort of like a recession of some sort. Because one of the things, especially for our investors, is if inflation goes too high, then your savings is wiped out. So imagine in this United States, the rate you get in a bank deposit is like 1%, and your inflation is 8%, meaning that whatever amount you put in your bank, whatever interest you're getting is not gonna help you. It's gonna be less than what you can afford with it. So for example, your $100 cannot afford the same thing that it could, let's say, a month ago, because inflation has risen. So it affects investors, it affects consumers in that they can afford less, and therefore they have to tighten their budget. Because if I could afford with my $100, for example, if I'm in the United States, I could buy, let's say, 10 loaves of bread. Now I can only buy 8. So that means if I can only buy 8, then that definitely affects my pocket, and especially if my income is still the same. And for the most part, we tend to see that incomes don't rise at the same pace as inflation. So if I'm being paid, let's say in Kenya, I'm being paid 100,000 Kenya shillings, just because inflation has gone up, let's say by 10%, doesn't mean my employer increases my salary by 10% to combat that. So that's the issue with inflation, that it affects consumers, it affects businesses, because now businesses also have to pay higher costs to afford, you know, businesses take raw materials, bring them together and offer to the public. So those raw materials are more expensive. So they have to charge the consumer even a higher price to afford it. And it's harder even for the consumer to stop paying for it. So it can lead overall to what they call a recession, where the economy just slows down and it becomes very difficult. And when the economy slows down, there's unemployment and so all sorts of problems.
Wow. Thank you, Charles. You've addressed that point at large in terms of it's globally, it's affecting everyone. And I think maybe our investors there, or an investor is there looking and saying, what can I do in this time? Yes, inflation is here with us. What can I do to protect my money and to ensure that I still experience growth in my portfolio despite the inflation levels we are currently experiencing?